Okay, I think everything's working. Welcome back to the weekend video. It's me, Enda, from bullwaves.org. And if you didn't know that already, well, I don't know, welcome for the first time. All right, let's get into this. This has gone on much too long for setup, and it's time before I crack up. Okay, let's get going. I'm going to show the 4-hour chart. This is the current wave count in Eurodollar. We have a 3-wave pattern to the upside, which is very interesting. If this is correct, if this wave count is correct, well, then we've got a failed kind of C wave at complete wave B. Excuse me, still suffering. If we have a failed, it means we have a failed C wave, a break to a new high, which is not uncommon. It's happened before plenty of times. The question is this decline impulsive, or is it just a corrective move? The fact that we've got 3 waves up, you can see here on the 4-hour chart. Again, this is Eurodollar, in case I didn't mention that already, which I probably did. We've got 3 waves up, so that suggests that the trend is down, or at least the short-term action is in fact impulsively to the downside. I've got a 1-2 pattern set up here on the hourly chart. You can see a running flat wave 4, which is not ideal. It's not wrong either. It does fit. And the fact that we were followed by a 3-wave pattern to the upside is again an indication that we are correct in assuming that the trend is changing and that we are beginning to look to the downside again. And if a 3rd wave is about to start next week, then we should expect to see some sharp and impulsive moves. That's saying the same thing twice there, aren't I? Sharp moves to the downside again, and possibly an acceleration as well. You can see that if this is a head and shoulders, you can see that the left shoulder kind of bottomed out, let's say around 120.57, and also we found support at that the low of the left shoulder. So we have pretty legitimate, left shoulder, head, right shoulder building or built. So what's left is for us to scale down the mountain on the far side. So that's what I'm looking for next week. Okay, let's move on. I don't want to spend all day at this because I know people get sick of it after about 15 minutes. I'm going to kind of plow on through. Okay, in general, I'm looking for a positive turn on the dollar, which should translate to a negative turn on risk assets. I mean, the dollar is just so beaten down. If you were to go around, like in general, if you're an investor in general, what you would like to buy is things that people hate for an extended period of time. People hate the dollar, and they haven't hated it this much in years, probably over 10 years now. And the strange thing is even though it's been sold down. Hold on, let's go to the daily. Even though the dollar has been sold down against, let's say, the euro and the euro and the pound and the yen, it's still relatively just range bound. I mean, why all the negativity? Why all the negativity? We are stuck in a range since 2016, or since actually you could go way back to 2014. October 2014, the euro dollar was trading at the same price. So we've done nothing in 6 years. The dollar against the euro has basically just flatlined. And in general, that's what you would call a correction. So, if anything, I think it should be heads up against the euro, because if the euro can't, take 6 years to go nowhere against the dollar, and the dollar has been absolutely trashed by, let's say, the presiding authority, that being, the U.S. Treasury and the Fed, the U.S. government in general. They have tried and tried and tried and tried to trash the dollar. They just can't do it. It's not possible to do because there's so much dollar-denominated debt. What do people want? They want dollars. And is it still, what is 80% or 75% of the world trade is done in the dollar? Anyway, it's too much. It's a long argument. It's a desired currency. You can't. There's no way of getting rid of it. The world is too tied to it. Anyway, after all that, if you were to pick up, if you laid out all the possible things that you could do with your money, the thing that's screaming out to me right now is the dollar. And hey, that's just me. I'm just an idiot. Don't listen to me. Okay. This is Eurodollar. I'm looking at an impulse wave down. Let's see if we get a third wave next week. Here's pound dollar again, topping out at a C wave. I haven't updated this chart, this 4-hour chart, for a week or so. So this ending pattern has been, I'm tracking an ending diagonal to complete waves. Still looking at wave C. This could be wave C of a straight flat wave 4, or the idea of a triangle is still valid, although let's say somewhat diminished right now. But I would still expect, even if it is, even if it is a triangle, then we should probably expect a 3-wave decline in wave D, at least probably down towards the 123.24 area. We would hit initial support at about 126.70, but I'd say we'd probably get lower than that. Excuse me. Okay, so let's get into the hourly chart. You can see here, this is the ending diagonal that I've been looking at. We've got a wave 1, 2, 3, 4, 3 waves up in wave 5. Little dip today, a little bit inconclusive yet. Way too small to draw anything from it yet. But we did hit a new high. We seem to have a pretty reasonable 3-wave pattern. Pretty darn good 3-wave pattern into today's high, or sorry, yesterday's high, Thursday's high. We broke to a new high, and we have that kind of rising wedge still in place. So I think if we start to see declines back below, we'll say 134 next week, then that would call the ending diagonal complete, and it would suggest that we have a turn in the works for wave 1 down. So what we want to see is 5-wave pattern break of 134. Okay, so let's get into dollar yen. Dollar yen is very interesting to me right now, but then again, I'm a fan of dollar yen for some reason. Just kind of sits with me well. Maybe it's just because the fact that dollar is first in the acronym. Okay, so I'm tracking again. It was a long, drawn-out ending diagonal wave E of a B wave pattern. So it's a B wave triangle that I've been tracking in dollar yen for the longest time. So we have wave C, wave D, and then just this long, drawn-out decline. You could still, in theory, you could call this rally off the February low into today's low, February 2020 into today's, last week's lows as a 1-2 pattern. You could still call that an impulsive 1, corrective 2. There's nothing stopping you to do that. Still quite valid. But I've been tracking this long triangle forever and a day. So it's looking more possible now that we have an impulse wave built off an E wave low. So let's get into the what's the 4-hour chart? 4-hour chart is saying the same thing. Let's get into the hourly chart. Here you can see 5 waves up, 1, 2, 3, 4, 5, and again we have this ending diagonal pattern wave 5. I think we've got it's a pretty complex flat correction, but a flat correction nonetheless. And we just so happened to hit right in that uh, pretty standard Fibonacci retracement in 50 and 62%. So we probably hit about 59, 50% retracement here in wave C of 2. We've got 3 waves down, and so far we have a bounce off the low. Everything fits. Everything fits at the moment. Next week, we want to see if we can get a smaller degree impulsive pattern up off this low. So 5 waves up, and a bullish higher low off wave 2 to begin wave 3. So the idea is that we are about to move up into a third wave. If that's the case, whoop-de-doo, I've been waiting for it for long enough, So let's see if this is actually the real deal. And if this happens, then I reckon this will probably coincide with the next leg down in gold that I've been looking for, which is becoming more and more likely as the days go on here. And it'll probably coincide with the initial moves down in the stock market too. So let's see how that works out. Okay, move on. So dollar yen looking for a smaller degree impulse pattern up off the low. Let's see how that goes. Okay, here is the 4-hour chart in the Dow. Doesn't really show me much. Just been tracking this fifth wave, wave 3, 4, and this fifth wave pattern here, wave 5. I still think we've got a good chance that we have an ending diagonal pattern here. So we have going into the hourly chart, maybe that's the best way to view it. Wave 3 and wave 4. So wave 3 and 4, or sorry, wave 4 itself traced out and expanded flat. So we have 3 waves down in A, a very complex 3 waves up in B, like a triple combination B wave, and then a sharp 5-wave move lower in wave C, which did eke out a very slight new low on my chart anyway. So it could be running flat on the cash chart. I haven't checked that actually. Most likely is. So expanded flat on mine. This is like a derivative, futures and cash amalgamated. So here we are working up off the 4th wave low, possible ending diagonal pattern, or maybe expanding wedge. Depending on how the next move goes, it could be an expanding wedge as well. We'll see. We have a decline into today's low, but there's an alternate count here for wave 5. We've got, first of all, let's one step at a time. And 3 waves up in 1, 3 waves down in 2. I'm tracking a 3-wave pattern here in wave 3, but you could also go an A, B, and maybe we're going to rally higher in a 3rd wave. Maybe this takes longer than this current count is showing. Oh, we'll just have to deal with that if it happens. This sideways move, anyway, over the last couple of weeks is pretty clear. Flat correction wave 4, and now I'm tracking 3 waves up into that Wednesday high, and we've declined and bounced off that again. So the high on Wednesday could be the final high. We've got 3 waves up. We did break to a very slight new high. It's a possibility. The decline off that high hasn't been either impulsive enough or sizable enough yet to draw anything from it. So we could also be tracking this alternate count here. So we could be the 3 waves up in A of 5. We could be falling in B of 5 into today's low, and we could go again. It could be a 5-wave rally in wave C of 5. So I'm betwixt and between them on that one. I'll just have to wait and see how that pans out. If we get a 5-wave rally to another fresh, let's say 31,500 kind of high next week sometime, I think that'll clearly indicate that we have a larger three-wave pattern in wave 5. So again, it'll bring us to the point of a completed pattern. So, you know, the door is open here. I know for a fact that I was pointing out John Husman's work in the week there, and I know he's measuring the internals pretty. He won't divulge what he actually follows, but I know that it's a kind of an amalgamation of risk-sensitive bonds and risk-sensitive across the bond spectrum as well. So he is pretty clear in saying that the way is open now for a trapdoor to open under the market. So we could see quite soon, if not before the end of January into February, we could see a I think it's getting more and more likely that we get some sort of a wicked sharp decline, you know, up in the thousands of points, probably to break us down below this previous fourth wave here first. So 29,400, probably a move down below 29,000. So it could be a you know, 2.5, 3,000 point, you know, sharp move lower, and that will be that kind of initial kick that the market needs to turn, that, you know, to break people's confidence, or at least raise questions. Right now, there's nothing that seems to break the confidence, which is again another indication that we are at a high, not a low. That there's not much left above us, but a whole lot left below us. It's a lot of room to fall there, guys. Okay, tracking this pattern, let's see how it oscillates over the next couple of days. If we get sharp moves lower again on Monday, that will probably favor the main wave count, but I think it's probably a coin toss between the alternate and the main there. So we might have another high in wave 5 left, depending on how this short-term pattern tracks over the next couple of days. All right, time to leave that. Let's move on to gold. Suffice to say, you know, there's every chance that we are about to spill down into a March move again, you know, like last year. And this time, there's nothing there to throw at it. You can see like this long-term kind of jaws of death pattern that has been tracing out, you know, for the last 2 years now, since March 18. So yeah, going on 3 years. We have another leg down left ahead of us, which could easily break 15,000. So 50% decline. Anybody up for that? Okay, let's move on. Let's see how this one goes early next week. Here's gold. Gold moved lower today. I think we're still tracking possibly a 1-2 pattern out of the 3-wave correction. This, excuse me, suffering again. It's hard to kick it. We're in a lockdown again here, so you know the schools aren't open. Nothing's open really, unless you want to just buy some food. So it's hard to get out and get exercise and get, you know, moving. And the weather has been horrendous as well. It's just rained constantly for the last 3 weeks nearly. But today, the sun was shining today, so that was good. Okay, so we have 3 waves down in A. I think it could be a running flat wave B. That's an alternate count at the moment, but at the moment I'm tracking this alternate count from this high onwards. So because the move down off that B wave high is really clearly 5 waves, and I'm tending towards the idea that we have 3 waves complete here. So this could be a 1-2 within wave C. So if this is 1-2 within wave C, then we should expect 3 within wave C. Then we're about to get reamed in gold. I don't want to say that, but you know, this just seems to be the way it's looking right now. We are leaning towards this lower low in wave 4, possibly below the 1700 mark. You know, if we're to continue, well, if we're to hold this trend channel lower trend line, I mean, Yeah, we're probably talking about a break of 1700 and then a bounce, somewhere around there. But I think if we hit 1700, I think that'll probably be a pretty good point to start looking for a turn in gold, and I think that'll be a pretty substantial buying opportunity, because I think the run up of that we'll get off 1700 into a possible fifth wave is going to be close to a double, probably over the next 8 to 10 months. So let's see how that goes. First, we need to find that low, and at the moment, it's pointing towards a break of 1700. I don't know if we've got a 1-2 pattern building here. Oh, we've got 5 waves down in wave 1 in green. We might have 3 waves up in wave 2 done. We've definitely sold today, which is it's definitely hinting at the idea that we're moving into a third wave. But I am not against the idea of a larger wave 2 yet. This could be a wave, or an A wave, B wave, C wave. So I'm not going to let myself get run away. I'm not going to let myself get too carried away with an immediate spill down into wave 3, but we'll have to just see how that goes. We haven't got a break of the internal B wave yet, so that's 1830. If we do get a break of that B wave, well then we're moving more in lockstep with this bearish count, and especially if we break below 1800 again, that's a big no-no for any sort of a bullish interpretation here. So what do we look for next week? If we get a bearish lower high again, a 1-2 pattern down, then that spells at least short-term disaster for gold, that we probably head towards or below 1700 as this large C wave completes. Okay, let's move on. There's not a whole lot again to say about crude oil. Yeah, what we've had this week is a little bit choppy. Maybe we've got a top in place, but at the moment it looks like it's a pretty standard flat. We've got 3 down, maybe 3 up. Yeah, I know it's hard to push that into a three-wave pattern. Maybe it is, but it is more likely given the fact that we've got a bounce off today's lows. We've probably filled a trend channel actually as well, if you want to. Yeah, we've bounced off the lower trend channel line, so maybe this is a fourth wave, an extended fourth wave, and we move higher into wave 5 next week. We'll just have to see how that one goes. There's nothing telling about this one yet. It might just track the stock market, in lockstep. So we'll see how that goes. And speaking of stock market, let's get into the S&P. Again, looking for wave 1 down eventually to happen. I don't think it started today. You can see here on the daily chart, we've drifted off an extreme. Actually, if you want to, and I do, you can see ever since last June, we've had nothing, rising prices and declining momentum. So we've got major divergence on the daily chart. We've got significant divergence on the 4-hour chart, and we have a completed pattern more or less on the hourly chart. So again, this is the ending diagonal idea. So 3 waves up in A, 3 waves down in B, 3 waves up in C, 3 waves down in B, or sorry, 3 waves up in 1, 3 waves down in 2, 3 waves up in C, or in 3, 3 waves down in 4, and maybe 3 waves up in 5. This could be wave C extending here. We've got 1, 2, 3, 4, maybe one final high in wave C. We may even get a touch of the upper trend channel line, the upper line of that wedge. If we do, all the better. Then we look lower for an impulsive move lower. Initially, it breaks 37.48 or 37.50. I would like to see if we got to break that wave 1 high, that'd be 37.13. So a push below 3,700 would break both, and might just break the knees of the bull market. Let's see. Close to the end here, I think. That's kind of the theme that I've been working on. Okay, silver brings us to the end of these. There's a 4-hour chart in silver. Again, it's a second wave in silver, so I think we are looking at a 5-wave move lower down in wave C. We probably should complete this in around the 19 level. If we hit $19 silver and we start to see some sort of a switch in momentum, I think that'll probably indicate a very significant buying opportunity in silver. That's not to say that we don't fall even lower. Here's a left shoulder, a small one, but one nonetheless. That gives us about 1820. So wave C down still has a significant move to go. I've finished the hourly chart here. We've got wave 1 down, maybe ABC up. Again, I'm not against the idea that this ABC will be larger. There are merits to the current wave count against, let's say, that alternate view. But we'll have to see. At the moment, I'm running with the idea that wave 2 is complete because we've got 3 waves up. We broke the previous 4th wave high, and we broke above the 50% retracement level, and now we've moved lower this afternoon, or today. Most of the trade today was lower, so we could have a small 5-wave pattern here. So maybe we are tracing out a very small lower high here below wave 2 high, and if that's the case, then we should see a pickup into a decline, or an acceleration into a decline next week. And that doesn't mean we fall directly down into wave 3. We could have a larger 1-2 pattern to build here first. So let's see how that works out. Move on. Bitcoin is looking weak, but I've said that before, and it has surprised me. I mean, they've been able to manipulate this one pretty successfully. So we have a possible 1-2 and maybe a 1-2. 1-2. So 3 degrees of 1-2 pattern. Possibly. It's looking for, or I'm looking for a complete retracement of the rally, but I think the market itself is as stretched as you could possibly pull any market, especially one as thin as this. So it's been easy enough to drive it higher. I reckon once it gets turning to the downside again, it's going to be easy enough to keep it going lower as well. Far too much optimism embedded in this market. So let's see if we've got wave 1. There's every chance also that we've got 3 waves up in A, 3 waves down in B, and then we move higher into a larger C wave here. So this could be A, B, C expanded flat correction. Let's see how that goes. It looks like, again, even the bounce today, it looks correct. It looks like a 3-wave pattern. So yeah, let's see if the algorithms don't crush this one as easily as they drove it higher. Let's move on. I'm just going to go straight for the Nasdaq because the FTSE I have been having trouble with. 4-hour in the Nasdaq. Again, this rising wedge pattern, we blasted out to a new high this week. So that kind of broke the previous pattern that I was looking at. But you can see here, this is the wedge that I've been following. Oh, excuse me. Sorry, everybody in the world is going to start yawning now because I did. Let's see. Yeah. Wave 1 high, wave 2 low, 3 waves up in wave 3. Some sort of some sort of a complex fourth wave. Now, you could even say that it's a triangle. You could say that this is a very stretched triangle. It could be an A, B, C, D, E triangle, wave 4, and then we've got A, B, C into wave 5. Definitely 3 waves up off fourth wave low, whether you call it running flat or a triangle. So I am, again, in my mind, the pattern suggests that we are close to the edge here too. I know you've heard me say that before, but I just think you just see risk everywhere. When everybody's seeing red and bullishly running, I can just see risk. Okay, let's just see. We haven't had any significant decline or an impulsive decline here yet, so there's nothing really to talk about until we get that and we break some of these kind of these previous swing lows here. So the Nasdaq looks stretched in a wedge, so let's see how that works out next week. That does it for me. I think I kept it reasonably short, under half an hour, hopefully under 20 minutes. Thanks for watching. Thanks for being with me. If you're new, hope you liked it, and let's see how next week goes. God bless you all. Have a good weekend, and I think it's over and out from me. Bye-bye. Be good. God bless.